Hello and welcome to another installment of Fundamentals of Investing from Left Brain Investment Research. Today we answer, what is compounding? I'm Brian Dress, Director of Research here at Left Brain Investment Research. In this series, we provide definitions for terms we think are vital for investors to understand. In this installment, we explain, what is compounding? The basis of both saving and investing is income, whether it be from interest, dividends, or the price appreciation of your stocks or bonds. But the mathematics behind quantifying those returns is not exactly straightforward. There is a somewhat magical mathematical concept that means an investor's returns are greater than the sum of her yearly income from those investments. That magic is called compounding. Simple interest involves simply adding each period's returns, giving an investor a return profile that looks like a straight line on a chart. In this graphic, we chart the impact of simple interest over time on $10,000 in savings with 8% annual return. But in the real world, it is rare to see simple interest calculation in almost any financial transaction. In reality, the interest you earn becomes principal periodically, often on a yearly basis. Those of you with mortgages will notice you've gotten the short end of this transaction over the years. I'm sure you'd prefer simple interest on your house note. The good news is that compounding is the engine that drives the value of long-term investing, as your yearly returns compound annually over time. In this way, you can turn the tables and take advantage of the power of compounding. Let's look at this in practice using the previous example. This graphic shows you the power of compounding in a single chart. As you can see from the graph, the lines corresponding to simple interest and compound interest separate rather quickly in terms of time, but the effect becomes quite extreme after a couple of decades. With simple interest, that $10,000 is worth $34,000 after 30 years. But when calculated using compounded interest, it grows to an excess of $100,000. You can see quickly why we at Left Brain call compounding the most powerful force in the universe. So what is the key takeaway from this chart? Compounding pays dividends quickly to an investor, but the effect is much more dramatic as time passes. The direct consequence is our view that investors would benefit from the compounding phenomenon most greatly by committing their money to compounding investments as soon as possible. Compound interest is governed by what is referred to as the Rule of 72, first derived by an Italian mathematician, Luca Pacioli, in the 15th century. Using the rule, we divide 72 by the annual rate of return to determine the number of years to double our money. So at an annual growth rate of 8%, it will take approximately 9 years to double our investment. Without getting too into the weeds on the math behind this concept, the impact of compounding increases dramatically for incrementally larger rates of return. You can see more evidence of this phenomenon in our previous video entitled, What is a Stock? Take a look at the chart on the screen to gain a basic understanding of the return profiles of stocks, bonds, and cash equivalents. Looking at the chart, it doesn't take much to recognize the compounding benefits of stocks relative to bonds and cash. On a year-to-year basis, stocks are riskier than the others. But over time, there is a major compounding benefit to accepting some of that risk in your portfolio. We hope this explanation helps you understand the idea of compounding, one of the most important concepts for long-term investors. For more educational videos like this, along with individual stock and bond reports, click the subscribe button below. You'll get the latest from LBIR and have the chance to become a part of our growing community of left-brainers who experience the informed decisions and independent thought that powers our search for profitable investment opportunities. Learn more at our website, www.leftbrainir.com. This has been Brian Dress of Left Brain Investment Research for Fundamentals of Investing. Thank you, and we'll see you again soon.